Alright, what's up guys? This is a new trade recap video for Tuesday. So today I took shorts today on SPY. So let me break you through what happened. So originally when pre-market opened, I wanted to mark out a bunch of 1 hour draws on liquidity. So I marked out this one right here, and then I marked out this one right here. So I knew that these were going to be my draws on liquidity that I was going to aim for. But unfortunately, when we hopped on the lower time frames, we saw that market ripped up pre-market. Boom, one draw already got taken out, and then this draw was already getting taken out. So my thought process after that was, all right, we might come up, we might sweep these two draws right here. But what ended up happening was we started reversing trend. So today was actually a really tricky day because we have these big fair value gaps stacked up right here that I can mark out. So, 1 hour fair value gap right there, and then we also have this fair value gap right here. So that was really tricky what ended up happening today because only have those 1 hour fair value gaps. But because of those 1 hour fair value gaps, we were actually able to play some shorts. So what ended up happening was, all right, I see we come in, we reverse trend, and then we have a bunch of fair value gaps stacked up right here. So my initial thought was, all right, we might hit equilibrium off this retrace, and then we might, push up higher. But what ended up happening was this fair value gap right here got inversed. So after this fair value gap got inversed, it was getting filled, and then boom, inversion right there. So inversion right there. So my new daily targets are this draw on liquidity, and then I have another draw on liquidity down here. Actually, these were my only draws on liquidity. This one right here. So what's happening is we're having the inversion. So I knew, okay, inversion, we're going to have a retrace eventually. So, all right, we got this fair value gap right there. So we come in, we fill this fair value gap, and, we fill it with here. This red candle, we fill it with the green, and then we fill it with the red. So my initial thought process is, all right, we just filled this fair value gap. We have change of trend, liquidity sweep. We have liquidity sweep confirmation because of the inversion of the fair value gap. And then we have confirmation that we're going to move down further by this fair value gap getting filled. So that's already there's two confirmation confluences, and that's one confirmation confluence as we're changing trend. So we have three major confluences, and that's how I usually trade. I trade off 3 to 4 confluences. What I didn't realize was, I can show you guys this right now. When we open up equilibrium and we draw a retracement down to here, this low down to that low, we're coming in, we fill equilibrium. That's absolutely perfect, right? As well as this fair value gap. But price ended up retracing to almost these relative equal highs right here. So these relative equal highs is where I set my stop loss. So when I entered in shorts, I entered right here below that candle. My stop loss after this, I had my stop loss right there at that most recent drawn liquidity, that high, if it can work. All right, we'll put it right there. And then this is my target. However, this trade didn't end up playing to my favor as much as it did. I did make a small $10 profit, but the only reason why is if you look on the 5-minute time frame especially, these are really big candles. Or not really big candles, these are really big wicks. So price is coming down, I buy in, okay, we're retracing back up. But this is what you don't understand, and this is what I want people to realize is this fair value gap right here from this high to this high is respected right there. Then why do we come in and we inverse it? That's my thought process going into this, because we open here, we close right here, so this is respected, but then we come in and we inverse it. Because of inversing it, now we have the opportunity to shoot up to this high, but price comes in, almost matches this relative equal highs, and then price retraces down. Another thing that could have ended up happening that we could have taken was after this inversion and we draw this equilibrium, price comes in, price fills equilibrium right there. That right there should have been our entry. Right there should have been our entry to target here. We entered kind of high, but the only problem with that is we got stopped out. We almost got stopped out way too early. And because of big wicks like this and on a low time frame, we're unable to make as much profits only because I'm an options trader. So price to contract is slowly decreasing the moment we get to here. But we did end up making a profit today. This is my trade recap. My conclusion to this is that I was really confused going into it just because the inversion of this fair value gap, but also the respectingness of this fair value gap. And then if we open up just higher time frames, on higher time frames, we have all these fair value gaps right here that are stacked up. Even in higher time frame, 15-minute, disrespect. 15-minute disrespect of the fair value gap. So that's good confirmation that, you know what, we're retracing, we're coming down. Because of very high impact news, because of war news, it is a lot harder to trade this week, especially last week. But let's see what tomorrow brings. Thank you for tuning into the trade recap. I hope you guys learned something.